In this video, I'm going to be going over an almost accredited investor who is on that verge of going from the first floor of the wealth elevator, buying little rental properties, to going into syndications and private placements. They've got a lot of built up equity and lazy equity in a high yield savings account. Hopefully it triggers additional questions, which you guys can put in the comment section below. But let's get going. If you're new to this channel, my name is Lane Kawaoka and I used to be an engineer. Today, I own over 10,000 rental properties, $2.1 billion of assets under ownership. I teach people to go from accredited investor status and beyond. There's a lot of great books out there written for folks getting out of debt, buying that first rental property. Look, we have e-courses like that for free, which you guys can check out on the website at thewealthelevator.com. But my huge passion is getting people to build family legacies, right? To get the $4 million net worth in your 40s and 50s and beyond. The way I've done that is through private placements and syndications after going through the whole single family home thing. On the first floor of the wealth elevator, which if you've checked out my new book that's available on Amazon and you guys write a review, take a screenshot and send it over to us and email team@thewealthelevator.com. And we'll hook you up with a free audio or PDF version to give to your friends. This first floor of the wealth elevator, it's essentially where I was in my mid to late 20s. This is when you're trying to go from accredited investor status when you are about $1 million net worth and you're just grinding away here. Somebody submitted a request for a coaching because it's on this verge of going from that first floor of the wealth elevator to the second floor of the wealth elevator, which what I want for a lot of people to do is don't make the same mistakes that I did when I bought a lot of silly single family home rental properties. If I would have known what I know today, I wouldn't have bought 11 in 2015. I would have just bought a few and then automatically moved up the syndications. So just reading out this profile here, 37-year-old male living in the Midwest, which is a little bit cheaper out there than a lot of you folks in California, but you guys never want to move away from that place, and I get it. The wife currently working, and their total combined income is $450,000 from their W-2 salaries. They maxed out their 401ks, and they're starting to do a little bit of a backdoor Roth, and they've got $250,000 in the 401k and $400,000 in high yield savings. And that's the yikes right there. That's the cringe yikes which I get. You don't want to do that, man, especially if your net worth is under a couple $1,000,000 and you're still growing your net worth up to that point. Just a list of what else they have: 50 grand in Vanguard index funds and some other various stocks there too. And they've also got a couple other properties, right? So they've already gotten moving with alternate investments to some extent. But just my quick synopsis on this. First off, congratulations on reaching this threshold in your mid 30s. Most of our investors, I would say, are at this point in their early 40s, and they come to us in their late 40s and early 50s to invest on the second floor of the wealth elevator. There is a lot of you guys out there that are in the situation where you're in your mid to late 30s and you are really a decade ahead of where most people are at. And when most people, I guess I should probably say people who are good with their finances on the way to financial freedom. You're just a decade faster than they are. And it took me even to my early 30s when I was still working my crappy engineering job at the time to really pull this stuff together, the taxes, the infinite banking, the alternate investing, to pull it all together, that I'm super excited to help you guys expedite this path and journey. And then hopefully maybe you come and party with us in Hawaii this January. I definitely see a little bit of the Dave Ramsey element going on here with the high yield savings accounts and maxing out the 401ks. To have that much liquidity, such a huge portion, in two ways. First, 40% of your net worth. That's just way too much money that for your net worth that's out there. That should be in deals working, whether that's real estate or heck, even if you want to put it in your 401k stuff, that should be there. Secondly, in terms of where your net worth is, this is shown in the Wealth Elevator book, that chart where you look where your net worth is, and it gives you a ballpark range of how much percent alternative assets you should have. And to speak widely, it's probably about a third to at least a half of your net worth should be in alternative investments at this point. I'm looking down this profile, it feels like more like 10 to 20% of their net worth is in that type of stuff. Obviously, you get slightly better alpha there, but more importantly, when you invest in alternative investments, you get that tax savings. And most of our clients are seeing an easy 10 to 20% cut in their taxes their first year of doing it, which speaks directly to how this all works, right? That's just one of the few strategies that we employ. But when you put these all in conjunction, that's how you really get this monumental change. As far as emergency savings accounts, look, I get it. We need them. But for most of you folks out there to have more than 20 to 30 grand to float in your checking accounts is a little bit overboard. Maybe if you're a business owner, you need more for payroll, but the biggest risk that you have to worry about is losing your job. And for a lot of you, now this is going to put you outside your comfort zone, which would probably be good, especially if you have $400,000 not doing anything right now. You want to think about it in terms of if you got fired from your job tomorrow, it probably wouldn't take you much more than a few months to line up new work. Especially if you're working for the government, then you have even more job security. This person's portfolio, looking at their index funds, I think that's general set of the sad American diet. I get it, you need some of it, but when your net worth is higher, like maybe $3-4 million or greater, that's when you start to get more and more of that in it. For now, like I said, you need more alternative assets. So check out that pullout chart in the Wealth Elevator book. And I think a lot of people disqualify themselves. They're like, oh, I can't do any of this stuff because I don't have real estate professional status. Check out the tax page, thewealthelevator.com/tax. It might even just be simply just you need a new CPA that has some cojones and not freaked out about having a home office. Goodness gracious. If you need a referral, reach out to us. But unless you have alternative assets that give you passive losses, that's where you're going to really have that movement in terms of your taxes. I see this person is doing the 401k max. That's very fire movement mentality there. I'm not a huge fan of these IRA accounts. When you invest in them, you get the tax treatment, but you don't get the passive losses that flow to you personally. And that's where we're really seeing a lot of these tax savings, which I think is low-hanging fruit. Of course, this particular person, their income is $450,000, putting them in the highest part of the tax bracket. Probably would need to sit down with you guys. And that's what I say. If you guys haven't yet, join our group, thewealthelevator.com/club, and book your free onboarding call where we can work through these types of issues. This one would definitely warrant one of those calls because when you take money out of a 401k or type of IRA, you're going to incur taxes. The question is, maybe you should not do that. Certainly, these guys should invest their $400,000 of high yield savings account first. So this is a phase program for this particular person. This person, they mentioned they had 529 plans. Most people in our world think that the 529 plans are just garbage 401ks. In reality, the best tool for the job is getting an infinite banking or accredited investor banking plan where you have better flexibility and you can self-direct that money to whatever you want. But overall, hey man, excellent position. You're definitely going to be achieving financial independence, maybe the mid 40s, certainly by the 50s. And this is, I think, where it's cool for someone like this to join our mastermind, where you're able to get around other people who are cresting over $3, $4, $5 million net worth. And then certainly by your 70s or 80s, you're getting over that 8-figure dynasty number of $10 million or greater. But you're going to need the group of people to get around and figure out what deals to invest in. We always encourage people, if you're willing to go on a recorded line, we can make up your name. We can try and hide your identity. That's cool. But if you want to check out more of these coaching calls, you can go to thewealthelevator.com/coaching. We arrange them by net worth. So figure out what your net worth is and scroll down the page and just start watching. If I can help expedite your path to financial freedom, that's what I am here for. And also want to get to know you guys a little bit better so we can vet people coming to our events and joining our inner circle network in the future. But with that, if you have any extra comments, put the comment below. Going through this whole transition myself, it was really hard to do it without meeting other purely passive accredited investors out there. So that's why we've created the network, which you guys can join